doing well. This is Kartik sir here. We are now going to do today the revision of audit of banks. Okay, very important chapter if you ask me. A chapter which has a good carry forward in CA final also. So whatever you learn in CA inter, you will directly get the benefit in CA final also. Okay, so let's see this. Now in audit of banks, the first part that I want to take you all with is in relation to advances. So we'll go there first, and I'll take you in relation to that part first. So everyone, please see this area now. Just a second. Correct. Advances. Okay. Now in advances, there are several parts. You should know each of them properly. So let's do it one by one. Please see here. What are the various nature of securities? The security can be a primary security or it can be collateral security. Primary security is your main security, and the collateral security is the additional security that you give to the bank. What are the examples of the most common type of securities? I have told the students in the class. You need to know any 5 to 6 points out of these points. So when you take a loan from the bank, what kind of security can you give? So you can give any 5 to 6 examples. It can be gold ornaments, it can be shares, it can be land, it can be building, it can be inventory, it can be any of these assets. Okay, it can be many other things also. Okay. Next, we had seen what is the mode of creation of security. Okay, what are the various modes? So in that we did a code called formulas. That is your pledge, hypothecation, mortgage, lien, assignment, and set off. Okay. Pledge is when you are taking a loan and you're giving a movable asset as security, and the possession of the asset is with the lender, that is the bank. In case of hypothecation, you are again giving a movable property as security, but in this case, the possession of the property is with the borrower. In case of mortgage, you are giving an immovable property as security. Mortgage can be registered mortgage or equitable mortgage. When you are giving an immovable property as security to the lender, at that time, if you are transferring it in the name of the lender and then giving it to them, it is, and then giving the documents to them, then it is called a registered mortgage, and without the change in name it is called as equitable mortgage. Okay, this is a revision video, so all the explanations of this I've done in the class, so I hope this revision video is helping you. L is in relation to lien is basically when you give the right to retain to the lender. So when you give the right to retain to the lender, it is called as lien powers, okay, or lien. After that, you have assignment. Assignment means your debtor you're transferring it to someone else. So when you transfer your debtor to the bank, it is called as assignment. Set off means, suppose if you have a fixed deposit with the bank, that is your credit balance is there with the bank. And if you have taken a loan from the bank, and if you are not able to pay the loan, and if the bank has the power to subtract your debit balance, that is your loan account, from your credit balance, that is your fixed deposit in the bank, then that is called set off. So basically, when the bank deducts your loan amount that you have not paid from the fixed deposit account that you have with the same bank, that is called set off. Okay, that is a mode of creation of security. The code is again formulas: pledge, hypothecation, mortgage, lien, assignment, and set off. Okay, let's go further. Then after that, we had done area which is, in my opinion, very important, and that is prudential norms. What are the various prudential norms? We'll cover the important ones. For the other ones, I've given you the notes also. Okay. So the important ones are in this manner. First is called non-performing asset. Okay, NPA. When is an asset called as an NPA? When the principal or the interest is overdue for more than 90 days, we call it as an NPA. Okay. Second situation where the bill has been discounted with the bank by the drawer, and the bank on the due date goes to the drawee to collect the money, and the drawee does not pay the money, and it is more than 90 days since the due date, then it is called as an NPA. Next, if the account is an out of order account, so account can be out of order in these three scenarios. Scenario number one is when the amount that is withdrawn is more than the sanction limit, where the amount that is withdrawn is less than the sanction limit, but there is no credit in the principal operating account, that is a current account. When the amount that is withdrawn is less than the sanction limit and there is credit in the principal operating account, but the credit is, sorry for that, just a second, but the credit is not enough, no, but the credit does not even cover the interest portion of the overdraft that you have taken, or the advance that you have taken from the bank. Okay. Now these are called out of order, and any out of order item becomes an NPA. Next is overdue. So overdue we will see in this manner. Let's see this overdue. That is this. Overdue, a separate table is there which says in this manner. I'll show you the table. See, whenever on the due date the borrower has to pay the money to the bank, and the borrower fails to pay the money for 90 days period, then we call that borrower as an NPA. Okay. Whenever the borrower is declared as an NPA, then for the next 12 months from the date of declaration of NPA, we call that borrower as a substandard asset, and the bank will start to slowly create provisions. So provision is created at the rate of 15% of the loan amount, okay, or the due amount. After the 12 months of the substandard asset period is over, then after that the doubtful period starts. So we start with the D1 period. So 1 year after the 12 months gets over, we call it as a D1 period. And for that, if the asset is secured, then we take 25, we increase the provision to 25%. And if it is unsecured, we increase the provision to 100% of the asset of the loan value. Next is even after this 1 year is over, the drawer is not paying. So now we are in the D2 category, doubtful category 2. In doubtful category 2, at that time, if the amount the borrower has not paid, and since the substandard asset period, it is now 1 to 3 years, that is nothing but year 2 and year 3. In that case, we call it as a D2 category. In that case, the provision in relation to the loan amount is increased to 40%, and in relation to unsecured loan we keep it at 100% only. So it was at 100% only, we keep it at the 100% mark only. And finally we have the D3 category. Suppose if the borrower doesn't pay the amount and it is more than 3 years, again from which date? From the substandard period date. When the substandard period gets over, from this date it is now more than 3 years, then it is called doubtful category, doubtful 3 category. In that case, we create 100% provision in relation to secured loans, and for unsecured loan, it stays at 100%. Okay. Suppose at any time, I have drawn this line, blue line here, which you can see going down. Suppose at any time, the RBI's inspection team or the statutory auditor or the internal auditor, if they say that the borrower is not going to pay you any money, then we treat such asset as a loss asset, and we immediately create a 100% provision on this asset. Okay. So now let's go to the base chart. Now this area which you're seeing on the screen is called as overdue, and overdue is a part of the original code, and that original code is note ag. Okay. So N we have done is NPA, then O is overdue. Now T is called tickling matters as per the code that I use. Tickling matter is nothing but term deposit, Indira Vikas Patra, Kisan Vikas Patra, life policies, and national saving certificates. For these are the best kind of securities for the bank, because even if the borrower is not able to pay the money, but the bank can 100% recover the amount in relation to these assets. Okay, I hope you remember the each and every example that we did in the class. These are called the tickling matters. Okay, so these are the best kind of security, and because of that, the bank will never treat it as an NPA. Provided only one condition is there, that sufficient margin is mentioned. The loan can be of 5 lakhs, and the secured amount, the security, should be of a value of more than 5 lakhs. Okay. Next is called erosion. Erosion in the value of assets is a very important thing for the bank to check. So when the bank is giving a loan and taking any asset as security, the bank should continuously keep checking whether the asset has eroded or not. If the asset has eroded, then the bank is at risk, because it means that the security value that the bank has taken is of a lesser amount. So the bank has to continuously check on regular basis whether, first condition is whether the value assessed by the bank regarding the security, if the security value has now dropped down by more than 50% of the value assessed. Suppose the value assessed is 1.2 crores and the security value has dropped down to, let's say, 40 lakhs. So 1.2 crores, 50% is how much? 60 lakhs. And if the value of the security has now dropped down to 40 lakhs, in that case, it is a big issue for the bank. The bank should immediately consider the security as a doubtful asset. Okay. Second situation is when the loan has been given to some party, and let's say that party has paid some amount on the loan. Let's say the loan given to the party was 1 crore and the party has already paid, let's say, 20 lakhs on the loan amount, and 80 lakhs is pending for the party to be paid. Now, security that the party had given, the security has degraded to such a value that the value has become less than 10% of the outstanding in the borrow account. So let's understand this. Suppose in the borrow account there was 80 lakhs is pending from the borrower, correct? So 80 lakhs, 10% is how much? 8 lakhs. And the value of the security has dropped down to less than 8 lakhs. In that case, we will treat the borrower as a non-performing asset, and in that, to which category? That is the loss asset category. So the bank should not have any hope that this borrower will pay any amount on this loan. Okay, because we are treating him as the loss asset. Okay, very very important. Erosion in the value of asset. Do it properly. What is this? Agricultural advances. Agricultural advances basically means in every state you have something called as a state level bankers committee, and they will divide the crops that are grown in that state into two parts: the long duration crops and the short duration crops. The crops that take up to 1 year to grow are called short duration crops, and the crops that take more than 1 year to grow are called long duration crops. Now, long duration crops are the crops. If the farmer has taken a loan for long duration crop, and if the farmer doesn't pay the loan within that crop season, one crop season means since the time you have taken the loan till the crop is harvested, long duration crop, that is a crop that takes more than 1 year. In that case, if the farmer is not able to pay that loan to the bank, then as soon as that crop season is over, one crop season is over, you will treat that farmer as an NP, non-performing asset. Also, suppose the bank has given loan to a farmer, but for short duration crop, then you have to take two crop seasons in this case. So as soon as one crop season is over, you will take another crop season here. And when two crop seasons are over, after that also, if the farmer has not paid the loan, you will treat the loan given to the farmer as a NPA. Simple. That is in relation to agricultural advances. Other than these, there are four other points. Suppose if there is a natural calamity in relation to agricultural advances, how it should be managed. Suppose if the balance sheet date, as on that date, if you have to check year-end transaction, how you should manage. If the loan is given for the salaried employees of the bank, how it should be managed. So some small points are there which you can go through. Okay. Now after this, we go to the next area in relation to advances. So after this part is over, I will take you to the next part. Just a second. Okay, please come to this part. Now here you have then a very important three answer set that is called in audit of advances. You have first, what evidences should the auditor check at the time of audit of advances? That is basically this question. So what evidences should the auditor check is one question. Second is what audit procedure should the auditor do? See, what audit procedure should the auditor do in order to obtain sufficient appropriate audit evidence? For that, the auditor will do some audit procedures. Okay. So what audit procedure should the auditor do in order to obtain evidence regarding advances? That is the second question. And the third question that should be there in your mind is evaluation of internal control over advances. Okay. We'll complete the evaluation of internal control over advances first. So let's do this. And for this, as you know, we have this table with us. So you have to check the credit worthiness of the borrower. You should check whether all the documents are there in place. You should check whether terms and purpose is properly explained to the borrower or not, and whether that is being complied or not. We should check whether the borrower has given us enough security. If the security is not sufficient, whether borrower has given us some additional security here. Additional security, if they are in the form of shares or any other security, we should see whether it is in the name of the bank and whether it is registered with the bank. Next is if inventory is given as security in relation to your overdraft facility, okay, or cash credit facility the bank is giving. And if inventory is given as security, then you should check the drawing power register, whether it is within the limit and it should not be in excess of the limit. Suppose if it is in excess of the limit, you will inform the controlling authority, that is the person who is handling the matter in the bank. He has to inform his senior, that is the controlling authority. Finally, large borrowers should be checked by the bank persons or more frequently, and other loans should be checked at least once in a financial year. These are the points that are there in relation to evaluation of internal controls. Okay. Now, what evidence should the auditor gather? That is basically your this answer. What evidence should the auditor gather? This area. For this, we had done a very nice story called the bald uncle story. I hope you remember. First is the BAL, that is balance sheet date. Then after that, you will have um, the barber says I'm doing a duty, so you'll have the amount due part. Then after that, he sits and reads the newspaper, that is the supported by loan documents. Then he sees that no hair is there, so we saw no unrequired advances. Then after that, he puts oil. So in the class we had fun and we learned in the way of appropriate and properly applied the oil. Then after that, you have the hair grows and the man is now disclosing, classifying, describing himself. And finally, the barber gives a cap in his hand because the cap acted like a provision in the past. Okay. Now after that, we had done the next part that is in relation to this answer, that is the man goes to his house. And in our table, it is this question: what audit procedure should be done in order to obtain evidences regarding advances? So now that is this question here. So that is the man goes to his house and first of all he tells his daughter that he's a valid father, correct? No. So you remember that validity. Then after that, he shows the Aadhaar card, that is loan documents. Then after that, daughter asks whether he has any operation. Then after the wife does an action, remember this and this. So you have existence, enforcement, and valuation. Then after that, the husband then shouts no. So no is what? Norms. Then after that, the wife goes to the temple, and there she meets the barber. She tells the barber, "Thank you, Anna." With that, we have analytical procedures. Then after that, when the wife comes back home, the hair has grown very, very large. So large advances have become problem accounts. And finally, when the man goes to the local, doctor for some medication because the hair growth is not stopping only, in that case, the rickshawalas pass which comments? Adverse comments. Okay, so you know this very, very well. Again, a story, and I'm not dictating the entire story, it will take time. But in the revision session, it is enough where I just give you the glimpses of the story and you're able to just imagine the answer once again. Okay, now that completes your this area in relation to audit of advances. Okay, now we enter the next area called audit of revenue items. So let's do this. In audit of revenue items, we have the first and the most important answer, which is this area. These were the concepts explained in the class, so I'll come to the answer directly. So in this we saw, first of all, the revenue should be recorded on accrual basis, and in nowadays it is recorded on the core banking system. Okay. Then after that, for tickling matters, if the loan has been given to the bank and tickling matters have been taken as security, tickling, as you know, again, term deposits, Indira Vikas Patra, Kisan Vikas Patra, National Savings Certificate, and life policies. So these points, if the loan has been taken by a person and he has given to the bank, tickling matter as security, it is one of the best securities for the bank. And I am again telling that the income for the bank, that is in relation to the interest income for the bank can 100% record it because there is no worry about this matter, because 100% this will be received provided there is adequate margin maintained. Simple. Then we saw all income should be recorded, no income should be unrecorded. Next is materiality. In materiality, we had seen that the RBI has advised the auditor that if the auditor is reckoning the income on gross basis, then if we should take 1% of total income as the materiality benchmark. If it is reckoned on net basis, then it should be 1% of the net profit before tax. Okay. If it is not material, then it should be recognized on receipt basis, and the auditor need not qualify this matter because it is not material only. Okay. So any mistake that is there is not material; it is a very small amount. Okay. Next is F, fees and commission. Fees and commission we first saw in relation to CLG matters. That is, if you remember in the class, we had done bills for collection, letter of credit, neither Modi example we had taken in the class, and finally the bank guarantee matter. Okay, so for this the bank will collect some fees. Next is the bank is renegotiating or rescheduling any outstanding debts. Then in that case also the bank will collect the fees from the borrower who is not able to pay the loan on time. Next is for bills for collection, the bank should collect the fees only after the drawee collects the bill. And finally, if the bills are purchased and discounted, the discounting charges should be apportioned between the 2 years if the year end is coming in the middle, and the discount charges earned and the discount charges spent should not be netted off. Should not be netted off. I hope you remember this. Finally, last point, very, very simple. If your net profit of the current year is there, and sorry, if your non-performing asset of the current year is there, and if you have already declared as a non-performing asset, it means you are not expecting any income to come from that. So they have said here, if there is a significant uncertainty exists, then no income from NPA should be recorded. And for the previous year for which income has already been recorded, what you will do is, if income is recorded in the previous year, but in the next year the asset becomes an NPA, then you will have to reverse the entry because now no money is coming in from that borrower. So we have to either reverse it or we have to create a provision that is called provide for it. In this way, the audit of revenue items is covered. Then we'll go to the other areas. These are the small areas which are covered, and we'll do it one by one. And please come to this part. Here we did something called as audit of revenue items. Very, very important. In this, we saw a code called ABC WinFit. If you remember, A is advances. Just a second, please. Please here, advances, bill purchased and discounted, commission fees, and other similar income. You can see here, advances, bill purchased and discounted, commission fees, and other similar income. For this, we have to, and others also. So basically, the income is wrongly created in the past, and even for finance charge component of finance lease. For these areas which I have circled, that is A, B, C, W, and FI, you have to remember that if you have already taken the income in the past, but that income has not is not realized, or the income has not come, then you will have to reverse it or provide for it. So everywhere you will see the same thing. You will see here, see reverse it or provide for it. Same thing you will see here, that is reverse it or provide for it. Again you will see here, reverse the income or make a provision. So same things are mentioned regarding this A, B, C, W, and FI. In relation to interest income, for which large debits are seen in the interest income account. For that, the auditor should make an inquiry whether that debit in the interest income account is genuine or not, and the auditor should see whether the bank has passed the reversal entries properly and it is not fake entries. Okay, and I had, if you look at your notes from this area to this area, I had given you a star or important because this is an important part. Okay, so you understand if large interest debits have been taken in the interest income account, we have to inquire with the bank whether what is the reason that they took such large debits, and we should do a proper inquiry and see whether proper justifiable answers are given from the bank persons. Okay, last point is in relation to takeout finance. I told you regarding takeout finance, very simple matter. If takeout finance is there, in that case it means that a person who has cheated us in the past or who has become an NPA in the past, regarding his further loans we are now worrying about. So if we are worrying about the further loans, we should not treat him as an income till the time the actual money is received. So if for a person who has become an NPA, if later on he gives some money, we should treat it as an income only if the income is realized, only if the cash is received, and not on accrual basis. Okay, very very important for takeout finance. Okay, takeout finance you will find it here. Simple. So that is your ABC WinFit. Now after that we went into the next area called partial recoveries. I hope you remember we had excellent discussion in the class. I told you if the partial recovery is done, then whether the we should take the entire income as principal or we should take entire income as interest, or partly as principal and partly as interest based on the proportion there in the past. So how we should take it? So I told you in the class we had did a discussion and we had arguments placed properly, and in that we saw that there should be a uniform and consistent policy regarding this matter. Also, if income is partly or fully realized in NPAs, it can be taken to income. But in this also, we have to see that the credit towards interest in the relevant accounts are not out of fresh or additional credit facility sanctioned to the borrower's concern. So basically, we should take the credit of the income of the past first and come to the most recent times. Okay, that is basically in relation to partial recoveries. Let's go to the next point, that is a memorandum account. Now in memorandum account, I told you that is a rough work account that the bank maintains. So if the person is not able to pay the loan, then we create a memorandum account and just keep a tab of if this person would have paid, then how much he would have paid. That money is not coming in reality, but if he would have paid, how much he would have paid. We maintain an account regarding that, so that it helps us in the negotiations of renegotiating the loan or any rescheduling of loan. It helps us in that matter. Next is in relation to income from investment. So if income from investment is there, for that we have a simple table here. I hope you remember this. In that we see the interest or dividend on investment we take first. From that we deduct the dividend from your joint ventures and subsidiaries abroad or in India. Any broken period interest we subtract, and finally premium on SLR investments we subtract. These are the things we subtract and we get this as the answer. Again, for individual points we have seen the examples. You have the diagram with you. You can just refer it very very quickly. Okay, so this is what we do in this case. Now, in this also two other points are there. Profit on sale of investments, if it is there, if it is profit, we'll credit to the profit and loss account. If there is a loss on sale of investment, we'll debit to the P&L account. Similarly, if we are revaluing the investments, in that case, if there is a increase in the value because of revaluation, we'll credit it to the profit and loss account. If there is a decrease at the time of revaluation, we'll debit it in the profit and loss account. Let's go further. Let's see this. Now we enter the expenses area. So now we did advances. We have now done a revenue item. Now we are doing the expenses part. And I'll divide the audit of banks into two parts. We'll do revision part 1 and revision part 2. So we are now doing the expenses part, which is the last part of your revision part 1. So let's see this. Now in this case, we first saw an answer. I'll just show you the diagram which we did, which was basically this audit of expenses. Very simple. We should see whether the expenses are reasonable. So that is the interest expense that the bank pays, whether they are in reasonable limits. Auditor should do an analysis of interest with the weighted average interest rate. So auditor should take weights regarding various types of interest, which is there: interest on FD, interest on saving deposit, interest on recurring deposit, all these interest, and do a weighted average interest rate, and then see whether it is matching with the value shown in the profit and loss account. Next is we should compare with the previous year's interest cost. We should also do a month-on-month interest analysis, which is part of your analytical procedures. And finally, we should do the checking on which basis, on sampling basis, because it is impossible to check the interest in especially big banks. You cannot check each and every interest payment. Imagine a bank like SBI. Can you check every month each and every customer's interest that is paid? Very difficult to check. That is what we are seeing here. Okay, so we'll do the checking on sampling basis only. Auditor will test check whether RBI directives are followed or not, a rate of interest is properly considered or not, whether interest on all deposits is calculated properly, interest on FD, interest on saving deposit is calculated properly, and whether it is disclosed in the right manner. And finally, whether internal regulations of the bank, that is their policy procedures, are followed or not. And finally, if there are inter-branch balances, ICICI Bank, one branch has given loan to another branch of ICICI Bank, then they have to follow the rates given by the head office. So head office, whatever rates they have given for inter-branch balances, that is the rate we have to consider. So the auditor will check whether these have been done properly or not. Okay. So this is audit in relation to expenses of banks. Let's go further. We did this area very simple. That is audit of expense items. Very simple. So in this you will see we have a code called Dadi operates car. Okay, very simple area. So we'll check the. So now what are the operating expenses? Basically month-to-month expenses like rent paid or electricity paid or we'll say Wi-Fi charges for of internet paid. So all these things are called as your operating expenses. Those expenses which you incur on monthly basis. So here we'll see in a flow. First is, so we should refer all the documents in relation to electricity bill, in relation to salary slip of the employees. All these things we can check. We can check whether analytical procedures are taken properly or not, whether there are any divergent trends. If we see year on year trends, if you are looking at, we should check the internal control whether they are there in place or not in relation to expenses. Now this completes your Dadi. Operates is nothing but operates. I have used the word here so that you remember operating expenses, just to connect the question with the code. Then after that you have calculation. Auditor should check the calculation regarding various expenses. Auditor should check whether corresponding figures of previous years are shown properly. Auditor should check the reasonableness of the expenditure, whether it is not too high. And finally, auditor should check the ratio of to the total operating expenses, whether the ratio has increased or not. Example, in last year we paid 2 crores out of 100 crores. Total operating expenses were 100 crores and 2 crores were spent for electricity expenses. So it was 2%. Okay, so the ratio is 2 by 100. In this year, it has become 7 by 100. So we'll question why it has increased so much, why how it has become 7 by 100 in this year. So this year also, let's say our operating expenses is 100 crores, but our electricity cost is, let's say, 7 crores. So how it increased from 2 crores to 7 crores? That is what the auditor is checking, the ratio to the total operating expenses. Simple to understand this area. Last area I'm covering in this only, that is in relation to provisions. Auditor should check whether provisions in relation to RBI compliances have been followed or not, RBI compliances, whether provisions for standard asset and NPA are taken properly. For standard asset, whether everything is taken on a sample basis, and for NPA, whether we have done proper classification for substandard, doubtful, and loss assets. We should also see whether the provision are adequate or not. Whenever we do the checking, we'll have to do the recomputation and see whether the amounts are properly shown. The auditor, if required, can ask for a detailed breakup of all the amounts. And finally, one of the most important provisions, remember, banks are also profit-making entities only. So we'll check whether tax provision is taken properly or not. Okay. So all these are the things that the bank will do in relation to expenses. Okay. So three big areas we just covered in a quick manner in revision. We did advances, we did revenue items, and we did expenses. Okay. Hi everyone, let's continue with our revision of audit of banks. Please tolerate my voice for today. It is actually I have a sore throat, but we'll continue with the revision sessions. Okay, so let's see this please here. Now we are seeing right now the answer in relation to computation of drawing power. So you have this answer called computation of drawing power, which is an important one, in which you should know how the computation of drawing power is done. So in this, basically, you will have to understand that there are two parts. One is in relation to the theoretical answer, which is here, and the other is in relation to computation, which is basically here. Okay. So I'll take you through both. So please see here, very, very simple part. Let's start. Please see here. First of all, whatever is the sanction limit and the drawing power that the bank has finalized for any borrower, it should always be within that drawing power or sanction limit. And if it exceeds, then we should inform the higher authority on an immediate basis in the bank. Okay. The bank normally will take the computation of current assets, and current assets basically mainly the bank will look at the current stock statement of the organization of the borrower. In case if it is a large borrower, we should check the current stock statement which is most recent, that is which is there within 3 months. In fact, if we check a older current stock statement, then it is not proper. It is they have written in the module that it is irregular, so it should not be considered. So the bank should check the stock statement, bank should check the quarterly reports basically, bank should check the annual report, bank should check the monthly stock statements of the borrower. Further, we should check the extant guidelines, which is basically the policies made by the board of directors of the bank. So the auditor will check whether that has been followed or not. Stock audit is compulsory if the exposure, it means the risk after giving the loan, is more than 5 crores. So if you have given a loan to a borrower of more than 5 crores and if the borrower is not going to pay you the amount, then there is an exposure of more than 5 crores. In other cases also, when the auditor, whenever the auditor recommends, you should get the stock audit done. Okay, 1 minute. We should get the stock audit done. Further, in case of non-lead banks, in case of consortium of loan, non-lead bank, we should take the stock audit report from the lead bank. From the lead bank, this in this I had given a example in which we had SBI, in which we had HDFC Bank, in which we had Axis Bank. So this example we must have done in class. You can go through it. Finally, they have given here that comments of the auditor are very, very important. Okay, this completes our answer in relation to computation of drawing power, the theoretical part. This construction business is not there in the new syllabus, it is there in the old syllabus. This point they have removed in the new syllabus. Okay, let's go further. Now if they ask you a question in relation to computation of drawing power, that is a numerical question, this is what you have to do. You have to look at the stock covered under insurance, you have to take that value, you have to reduce the creditor's value, you will get the paid stock, the stock for which we have already paid. You will reduce the margin from it, that is the percentage of the paid stock. This the bank will not be ready to give as the borrowing, so this much we have to reduce. You will get A as the answer. Okay, next we'll take the total debtors here. From debtors you will see debtors which have exceeded the credit period which have been given to them. So debtors, suppose you gave a credit period of let's say 90 days, and debtors which have not paid since 90 days, that you have to reduce. Debtors within the credit period, you will get the subtotal here. You will again reduce the margin because the bank will again not give you the borrowing amount regarding the margin part, and you will get the B subtotal here. So A plus B is the total drawing power limit that the bank will finalize. This they can ask you a question in the examination. So this format in which you need to remember, it's a very simple one. It's a very logical one, so that you can easily implement it. Simple. Okay. That completes in relation to computation of drawing power. Now I'll take you to the beginning of this chapter where the other answers are covered. We'll do one by one and I'll help you with this. Let's go for it. Now, very simple answer. RBI, basically RBI is responsible for which matters in relation to a bank. So RBI is responsible for, they have said, for comprise bank and non-banking financial institutions also. RBI is responsible for them. So for banking functions and NBFC, non-banking financial functions also, RBI is responsible. So RBI will set the norms and the rules for them. Second is the monetary and the credit policy for the country, the RBI will set. And finally, regulating the activities of commercial and other banks, the RBI will set. What are the functions of the RBI? In first is issuance of currency, regulation of currency issue, acting as a banker to the government, that is central and state government, and acting as banker to commercial and other types of banks. So the RBI acts as a banker to them. Okay, so whenever they are in need of funds, RBI will provide the funds to them. Okay, let's go further. What are the various types of banks in India? Very simple. Again, it is a area that you should read very, very carefully. Let's see this. Commercial bank, regional rural banks, cooperative banks, payments bank. You'll get the other area, that is development banks and small finance banks. Here, no, these examples which they have given, see Equita, small finance bank, AU, small finance bank. Here also you can see your IFCI, IDBI, all these areas. All these areas become very, very, very important for you to understand. Okay, that is basically this part which is given here. Okay, so you will see that examples here: Punjab Gramin Bank, Tripura Gramin Bank, Allahabad UP Gramin Bank, Andhra Pradesh Gramina Vikas Bank. So all these examples become very important because if they can ask you, Punjab Gramin Bank is a type of, and you have to remember it is a regional rural bank. So just be careful with this example which I say can ask in MCQs. Let's go further. Now we had done this question called what is the bank audit approach. So in that we had seen what are the common questions and steps to be kept in mind while undertaking the control activities. So in this we had done the meditation story. So if you remember that, first is this: who performs the controls, and the light on his head, that is requisite knowledge and authority. Then he takes the print, so evidence is generated. Then after that you have 5 times he does that, so frequency. So the first point is when and with what frequency, and is the frequency enough. After that you have that person goes and first makes a file, Then after that, he writes on the file, he has to maintain it for, let's say, 8 years, and then he puts a message in the to the auditor that is available for auditing purpose. Then the colleague asks the bank person that why do you meditate? So you understand why is the control being performed, what type of errors and errors are prevented or detected. Then you have how the control is performed, the control activities. Remember the feather is what bypassed. Then bypass if any is detected. Remember this action bypass if any is detected. Okay. Then you have how are the exceptions or deviations resolved, and finally what is the time frame for resolving the exceptions or deviations. This is how you do the bank audit approach. Simple. Let's go further. Now we have the next area called form and content of financial statements in relation to the audit of a bank. Okay. So in this we see, you can see here the nationalized banks here, the State Bank of India, subsidiary of State Bank of India, regional banks, the Banking Regulation Act in relation to making the financial statements applicable to them, so that they have to follow a section called section number 29. Okay. Next, we have every banking company in India will make the balance sheet as per Form A and profit and loss account as per Form B. This is as per the third schedule. You can see here the third schedule to the Act. Act here means the Banking Regulation Act 1949. Okay. Banks always have to follow the accounting standards under section number 133. Okay. Let's go further. Next, uh, the audit of banks is audited by a person duly qualified to be auditor of a company also. So you understand again, CA in practice will do the audit of banks. So the eligibility qualification and disqualification for a CA will be the same for a bank also. Okay. Let's see further. Now, appointment of auditor in any bank, this is a simple answer. So you have to remember, in nationalized banks, the board of directors appoint the auditor after approval of RBI. In State Bank of India, CG plus C&AG, they appoint the auditor. So in fact, the C&AG in consultation with CG appoints the auditor of the State Bank of India. In SBI subsidiaries, SBI appoints the auditor. So SBI appoints the auditor. In regional rural banks, the bank appoints the auditor after the approval of CG. In other banks, shareholders in AGM after the RBI's approval, they appoint the auditor. The remuneration of the auditor of the nationalized banks and State Bank of India is finalized by RBI in consultation with CG. In consultation with CG. So RBI will speak to the central government. Okay. Let's go further. Remuneration of auditor is the same, so it is fixed by the general meeting of the bank. Next is normally for other banks. Powers of the auditor remains the same. See, they have given the same powers as those of the company auditor. And as you know very well, the power of the company auditor is given in the section of powers and duties. That is section number 143 of the Companies Act. Okay. That is the powers and duties of a statutory auditor. Let's go further. The auditor's report in relation to the audit of bank, especially in the case of CR, nationalized banks, and also in the case of State Bank of India. For these two banks, remember, the auditor has to give a report to CG regarding the bank. The what areas will it cover? It will cover these areas we see here, where the balance sheet and profit and loss account give a true and fair view. Basically, whether the financial statements give a true and fair view. Second, whether transactions that the bank has done, whether they are in the powers of the bank or not, whether the branch returns have been received properly or not, and any other matter that the auditor considers necessary, the auditor can mention in the report to CG. Simple. That is basically this part. Let's go further. This is a simple area. You can go through it. You can read it. Come to this part, LFAR, long form audit report. Long form audit report, you have to remember a date, that is, it should be made before 30th June every year. So LFAR should be submitted before 30th June every year. Simple. Let's go further. Reporting to RBI regarding the CA's functioning. Now here you can see if an accounting professional, you can see this accounting professional. So RBI has given a warning to accounting professionals that see accounting professionals whenever they are doing the auditing, and if they find something which is susceptible to be fraud or fraudulent activity or any act of excess power, that the bank manager is using his power in a wrong manner, or he smells any foul play, means he feels something is wrong in the bank, in the bank's functioning, he should refer the matter to the regulator, that is RBI. That is what this area mainly mentions. So this is a RBI circular directly for those in the accounting and auditing profession. That is basically a CA. Simple to understand this area. Okay. Let's go further. Now we enter the last part, that is in relation to conduct of bank audit. For this, I have already made a separate video on YouTube. I will put the link in the description to this video, and you can watch that link. In that, proper explanation regarding this matter is given, and this area is covered in 50 minutes, 50 minutes. But you get a proper grip regarding this matter in a very nice manner. So I'll quickly just help you with the revision part. Please see here. First job given here is, please see here, that we have to do the initial consideration while doing the audit of banks. So initial consideration basically means what? We should not be indebted to the bank, first of all. So in the initial consideration, they have said that we should not be indebted to the bank of which we are going to do the audit. Second, we should not be involved with any internal assignments of the bank in the same year. So if we are helping the management with some work in the same year, in that year we cannot be the statutory auditors of the bank. Third, we should help the bank in, we should do our audit planning. This SA 300 is audit planning. And while doing the audit planning, we should keep these two standards in mind. That is 210, that is agreeing the terms of the audit engagement, and SA 220, that is nothing but quality control. So these two things have to be kept in mind. In quality control, especially, you will keep a focus on the acceptance of the client relationship, because you are going to start the audit of bank for the first time with a particular bank. Next is, you will keep in mind SA 510, you know very well, that is opening balances, because you are doing the audit for the first time. For this client, you will be checking the opening balance, whether the opening balances contain any material misstatements or not. Okay. Next, we'll check clause 8 of part 1 of the first schedule, which says that a CA should communicate with the predecessor auditor in writing whether he can, whether he should take up the audit or not. And he'll take the recommendation of the predecessor auditor. The predecessor auditor, if he says that, see, the client did not pay me the fees, then it is a warning signal for the existing auditor who has joined the audit currently. And he'll get a warning that he should maybe not take up the audit work. That is clause 8 of part 1 of the first schedule. That where a CA who is just appointed to do the audit work, he should communicate with the predecessor auditor. Okay. Finally, the auditor should consider the engagement risk. Auditor should have a good team in his place, that is T, and U is understanding the entity and its environment. Okay. Auditor should assess the risk of material misstatement. Auditor should test the control, that is internal control checking. Auditor should check the accounting process of the bank. That mainly involves checking the manual or the IT process that the bank has set in place. Okay. Next is, the auditor should check the risk management process. Risk management process means how is the bank looking into the various matters where risk is involved. So first of all, this basically means from the top. Look here, this basically means from the top. From the top, the TCWG should have oversight over the bank's internal control process. The company should have a system where the company is controlling the activities, and every activity has a step-by-step process to it. For that, in today's times, for accounting purpose especially, reliable information system should be there in place. Reliable IA should be there in place. Risk identification, risk measurement, risk monitoring, the bank should do continuously. What is the risk? Is risk identification. Measuring the risk, how much damage the risk can do, is risk measurement. And monitoring the risk to see whether the risk, after we have put the procedures in place, whether the risk is still at a very high level or it has reduced. That is what we are checking. That is risk identification, measurement, and monitoring. Finally, we'll monitor all these activities and ensure that everything is working well in the bank. That is called risk management process. Important answer. Okay. Next is engagement team. In our engagement team, we'll have more experienced people who will share their knowledge. We'll have the team members who will exchange information on the risk, and there should be a very good understanding between the more experienced persons and the team members who are there in the audit team. So there should be a good understanding between the two. Next, what matters should be discussed by the engagement team members? They should discuss the matters regarding FREPA. FREPA is F is fraud, R is risk regarding any engagement risk, pervasive risk, specific risk. They will discuss these matters. Regarding errors that have already been identified in the past, they will discuss those. Errors which may happen in the future, which have a chance of happening, that also we will discuss. P is professional skepticism, and A is uh, anything that I come to know is going wrong in the bank, I should alert others. So A is alerting others in my engagement team. Okay. Next is, I should have an audit strategy in place, audit plan should be in place, audit memorandum should be there in place. Audit memorandum in normally means a summary of whatever you have planned in depth. Sometimes the plan can be very elaborate. So you want the plan to be in concise format, and that concise format is called memorandum. So in this, you will mention all the risks that are there. You will mention what risk assessment, what response to risk are you planning to do to manage those risks. All these things you will write in short. That is called memorandum. Next is, auditor will keep in mind materiality. He'll look at whether the bank is a going concern or not, and whether there are any matters of fraud in the bank. Auditor will look at the specific risk. Auditor will look at the outsourced risk. Auditor will ensure that there is a proper response to risk that is given, and whether the bank has dealt with the risk properly or not. Next, auditor should see whether stress testing has been set up by the bank properly. There is a requirement of RBI. Auditor should see whether Basel III framework is there in place or not. In the class, I told you to watch a few movies which really help you to understand the 2008 loan crisis in USA. And based on that, and after that only, the Basel III framework came into the picture. And Basel III framework is now a very standard requirement for the banks to follow at the time of giving of loans or giving of advances. Finally, the auditor should review the reports that are there. And this review the reports has a separate answer. I'll show it to you. You can see here, first is the previous auditor's report, then you have the internal auditor's report, then you have the charge handing over report. Okay, charge handing over report. Then you have the internal report of the bank, the internal inspection report of the bank, the RBI's inspection report, and finally, when a loan is given to a borrower, we take a security from the borrower. This security, the bank should keep checking regularly whether there is any erosion in the value of security. Correct? So the bank should keep checking whether the value of the security is intact and it has not fallen by too much level. That is called verification of security report. This also the auditor will go through. Comfortable till here? Okay. Now this completes our elaborate revision in relation to audit of banks. In this, the students who are my students will find it very, very comfortable because we have used these diagrams to learn. Students who are not my students, don't worry, you can revise using these. These are completely module based, so it gives you confidence while revision. I wish you all the very best. Take care. See you. Bye.